Politicians have made all sorts of commitments to voters that they don't have the tax base to fulfill legitimately. And so the increase in the supply of fiat currencies, inflation, is going to accelerate. And so the value of all these fiat currencies is going to diminish. And so individuals are going to be looking for alternatives to a failed government-run fiat monetary system. And those solutions can be provided today more efficiently than they could in the past. Because if you take gold and you have various companies, reliable companies that can store that gold, and I know a lot of people in the Bitcoin community, what they don't like about the idea of having a tokenized gold and having gold or digital currencies backed by gold is they say, well, you have to trust the counterparty. Well, sure, that's what capitalism is all about. You always trust counterparties. Anybody that has an insurance policy, it's only as good as your counterparty. People have life insurance, auto insurance, fire insurance. You have to trust the counterparty. In a free market, there are all sorts of mechanisms to validate that trust. And in a free market, companies compete with one another for goodwill.
Peter Schiff discusses how politicians make commitments they can't fulfill due to inadequate tax bases, leading to increased fiat currency supply and inflation. He believes this will devalue fiat currencies and drive people to seek alternatives. Schiff suggests tokenized gold and gold-backed digital currencies, despite concerns about counterparty trust. Reliable companies like Brinks could compete to store and safeguard gold, boosting the popularity of digital currencies backed by them. He argues that sellers of goods and services will drive the adoption of alternative currencies, as they won't want to accept rapidly depreciating fiat currencies. In countries with high inflation, underground economies rely on stable currencies like the US dollar. Schiff notes that physical gold doesn't need to be sent for transactions. Evidence of ownership suffices. He also ends with the benefits of blockchain technology in verifying the legitimacy of digital currencies backed by gold. Let's dive into the rest of the video.
You take a company like Brinks, which has been in the business of storing and transporting gold for, 150 years. They've never lost an ounce. And that's part of their brand. They promote that. That's the goodwill that, hey, you can trust us with your gold because we've never failed. Nobody has ever lost an ounce of gold. And so you will have in the private sector companies, and then probably governments too eventually, that will compete with one another on who is the most reliable storehouse of gold. And then the digital currencies that are backed by reliable stores of the gold, those are the brands that are going to be more popular and more marketable. Because ultimately, I think what's going to drive the use case for real money on blockchain is not going to be the consumer. Because as but somebody who wants to buy, Gresham's law, good money, bad money chases out good money. I don't want to go out and buy something and pay for it with my gold. I want to pay for it with paper because the paper is going to depreciate. Why would I want to pay with gold? I want to hold the gold as a store of value. I want to get rid of my dollars. What's going to ultimately drive a movement towards an alternative is going to be the sellers of goods and services who want to be paid for those goods and services in real money. They're not going to want to risk selling something and accepting a fiat currency in exchange if the value of that currency is eroding away too rapidly. I mean, right now, when you were looking at, prices going up 2% a year or something like that, it wasn't that dramatic. And people were able to, conduct business and plan for that amount of inflation. But as the inflation rates get higher and higher, it becomes more and more difficult for businesses to operate, especially if you're selling merchandise and then the cost of the merchandise that you're selling goes way up after you sold it and you have to replace it, and you don't know that you have the ability to do that in a depreciating currency. That's why if you look at a lot of countries, let's say in South America, where they have historically high rates of inflation, you have big underground economies where a lot of the merchants are selling for US dollars or they're selling for euros. They don't want the local currency because the local currency is not a reliable store of value. Well, soon these major fiat currencies, especially the US dollar, they're not going to be a reliable store of value either. So the market is going to be looking for alternative. And when it comes to using gold on the blockchain, a lot of people will say, well, I can't send my gold, right? If I'm in the United States and I want to buy something on the internet and I want to conduct business with a company in the UK or a company in Australia, I can't send them my gold. I don't have to send the actual gold. All I have to do is send the ownership of that gold. Why do I have to send the gold? What's important is the evidence of ownership, because just like the olden days where you had your gold with a blacksmith, or when you had your gold at a bank and you had a note, right, from that bank that represented gold that was stored in that bank's vault, every time I wanted to buy something, I didn't have to run down to the bank and get my gold. I just gave somebody the note. And the note was a reliable proof of ownership. And the person I was transacting with, he'd rather have the note. He didn't want to go down and get the gold either. He just wanted something that evidenced that he owned that gold so that he can then use it to buy something else. Because when you're using gold for money, nobody wants the gold to use it. I mean, they're not jewelers. They're not going to make a ring out of it or something like that. They want it to use it to buy something else. That's the definition really of money. You don't want the money because you want to use the commodity. You just want to use it to acquire something else. So it's a lot easier to do that with the money substitute. That's why currency is called a money substitute, because it can substitute for money, but it derives its value from the money that backs it up. Fiat currency has no value, but real currency does. And the same thing with the blockchain, only better. Before, when you had a paper currency, you had to be able to authenticate the legitimacy of that banknote. Was it actually a note of that bank? Because what gave it value was the fact that there was gold. But if you had a counterfeit note that wasn't really from that bank, well, then it wasn't worth anything. But today with blockchain, it's so much easier for somebody who accepts payment in a digital currency backed by gold to authenticate the legitimacy of that digital currency.
As we reach the end of this captivating exploration into current economic events, I hope you've gained valuable insights into the ever-evolving financial landscape. Remember, staying informed about the latest economic developments is crucial in today's interconnected world. By understanding the forces shaping our economy, you can navigate the uncertainties and seize opportunities that arise. Whether it's market fluctuations, policy changes, or global trends, staying engaged with economic news allows you to make informed decisions that impact your financial well-being. Stay curious, stay informed, and don't forget to like, comment, and share this video.